Oops. Okay. Hello and assalamu alaikum everyone. Thank you for joining our first ever Yielders Financial Empowerment webinar. I am absolutely delighted to be here today. And so just to introduce myself, my name is Marwa Adawi and I am the Senior Technical Lead at Yielders. And I have been with this business since inception. So I know the business inside out, been through all of the journey with it, very passionate about it, believe in it. And most importantly, I just want to financially educate everyone on our products and what we do. I want to create a safe space for female, just especially in this industry, as I feel we do have a massive gender gap on our investment platform, as we'll see as our webinar progresses. We'll be talking a bit more about that. I've also got on the line Medina Wafa, who's our operations analyst. Salam, Medina.
Alaikum assalam. Hello, everyone. Thank you for introducing me, Marwa. So my name is Medina and I'm the operations analyst at Yielders. And I'm looking forward to doing this webinar with you guys.
Okay, I'm just going to share my screen and we're just going to get started in a minute. Okay, can everyone see my screen?
Yep, I can see it.
Okay, wonderful. So, okay, so we've given an introduction already about women's financial empowerment, and without further ado, I'm just going to go. So I think we'd like to start with a poll for all of our ladies, simply because I'd like to understand your investment habits, and if it hasn't happened as yet, what's stopping you from actually making investments. So if everyone could go to the link that has been posted already in the chat, Medina, if you could recirculate that, please. And also, and you could enter the voting code if it asks you for it. Otherwise, you'll just be, it will be presented on your screen. We'll give everyone a few minutes to vote, and then we can have a discussion about it, about the results. And then I'll hand over to Medina.
All right, so I am going to share my screen now so we can see the progress of our poll.
Oh, wow. Okay. That's really
good.
Okay, so still coming in. Let's wait a few more minutes, Medina.
Yeah. All right. So it seems the majority actually does invest. There's still quite a large number of you who don't invest, which hopefully we are looking to change. So I'm going to move on to the next slide, which is why, what the main reason is as to why you do not invest.
We're just having some questions. Sarah is saying she can't see the slides. We are currently on the website. Okay, Medina, do you want to continue?
Yeah. So I'm just looking at the second slide with the main reason as to why most women don't invest. So I can see it's a bit of all of these reasons actually. Yeah, so complex investment language currently at 25%, not knowing where to start at 33%, reluctance towards taking risk 22%, and other 22%. Obviously, these
So it's
vital.
still working out. So it's still balancing out. I mean, I think we did know that not knowing where to start, that's actually something that I personally have felt over the years, just because there's with that market being so crowded and so many different investment opportunities and options that look fantastic, but then you don't actually have the right information or education around it. It does become really difficult to then tell yourself where you should start. But yeah, Medina, carry on.
Yep. So these were the two main questions, Marwa. If you'd like to go back to the webinar, it seems that it is mostly, as you said, not knowing where to start, and also a bit of a combination of reluctancy towards taking risks and some complexity in understanding the investment language around investing.
So we've got B on the chat saying what has held me back from investing previously is making sure investments are halal or Sharia compliant. There doesn't seem to be a central place which advertises this. Absolutely right there. So things are changing for sure. I'm not sure if there's definitely central portals that are popping up. Specifically, Islamic Finance Gurus actually gives impartial advice on investing and various options of a halal and Sharia nature. So actually, you're right, it's a very, very niche market, and there's not enough out there to a central hub or a portal. But I think with the rise in fintech, a lot of this information is starting to become a lot more accessible, and I can envisage that already in the last kind of 2 years that things have drastically changed. We also have found that a lot of our investors, they actually have been doing impartial reviews as well. So they've tested our platform, they've been through the process, and they have received dividends from us, and then actually given the pros and cons on the website, on their own website or investment platforms. And I think the reviews are really helpful in making us gauge what else is it that we can do in order to improve our process and how accessible we can make it. So yeah, I mean, definitely a very, very valid point, B. Is there any other questions or reasons why anyone else has found it difficult to invest? Please put it in the chat, or I'm happy to unmute you if you would like to talk. Okay. All right, in that case, I guess we'll just move on. So Medina, I'm just going to share my screen again, go back to the slides, and okay, Medina, I'll hand over to you.
All right. So as Mara mentioned, of course, the main aim of the session is to identify why women aren't really investing and what we can do to change that. So we did some research, and we found that in the UK, it's only 1 in 5 women who actually invest, compared to 1 in 3 men, according to a research done by YouGov. We've also then looked at our internal investor base and found that 83% of our investors are men, compared to 17% of women.
Sorry, yeah. Medina, that was me.
No problem. What we also found was that women tend to save more, so put more savings into their bank accounts compared to men, and that's according to the Office of National Statistics. They have also found that when women do invest, these tend to be in less risky options. We found that women spend more time researching their investment choices as opposed to men. And very likely that's linked to the second to last point on the slide, which is women who do invest actually outperform their male counterparts in terms of returns on their investments. So there's positives and things that can be better. the reasons that we've found for women not really investing is their reluctancy towards investing. So only 28% of women feel confident about investing compared to 45% of men, according to YouGov. And one of the reasons, again, is eliminating investment language and overly complex jargon. So according to YouGov, 30% of women think that they have a good amount of investment knowledge and an understanding of investing. That's also something that we are definitely looking to change. And finally, the end goal of investing for men and women varies. For women, this is financial security for their families, whereas for men, that's not necessarily always, it's not the primary reason. And that influences the level of risk that women are willing to take. So why do we advocate for investing? Because we believe that some of the key benefits of investing are that it provides financial security, which in the long term means more choice and freedom for women. Additionally, it makes up for the gender pay gap, which although has been narrowing over the years, it still exists till this day. So investing, the returns that can be made from investing is an excellent way of making up for the gender pay gap. Thirdly, because it allows women to save more for retirement. At the moment, women have smaller pension pots than men do, and narrowing the generational gap, the generational financial wealth gap for women is another benefit. And lastly, as mentioned, women tend to save more into their bank accounts, and these savings, they lose purchasing power over time due to inflation, which is something that investing can make up for.
And just to add to that point, thanks, Medina, is that the fact that obviously if something sits in your bank, it's zakatable as well. So you have to pay zakat. So you're actually making almost 5% loss a year if you continue to basically not invest your earnings or your savings. So that's another reason. But yeah, Medina, you've really just summarized everything really well in terms of and I think the key over here is to look at our own investor base and look at the massive gap that we do have, which is 83% are men in comparison to 17% of female investors. So hopefully, inshallah, after today that will change. And I think I've personally, from my own personal experience and time at Yildiz, I have found that there is a level of comfort when a female speaks to a female about the investments and the investment options and how they work. It is not always necessary, but it's my own personal experience. And from my own personal experience, again, I've found myself in lots of times thinking, where should I start with an investment? So these are all the questions that are, and I think a gender pay gap is also continues to be a big issue because again, not necessarily from my own experience as well, that in terms of savings, do I have enough to save as well as basically live a decent lifestyle? So I think there's a few things that add to that in terms of why investment is a little bit, making an investment choice is not so natural to me myself.
Yep. So what we hope to do in this session as well is, targeting one of the key reasons why women don't invest, which, as mentioned, is the investment language and the jargon that exists out there, and which makes it a little bit inaccessible for women, to get into investing. So there are a number of terms on here that we would like to go through with yourselves and just provide a little bit of an insight. Is for yourself to take away and to learn from, but also it will help you understand sort of the next slides that we will be going through in terms of what the investment process then actually looks like with Yildiz. So the first one is equity, which refers to the number of the number of shares that you own, or the amount of stock that you own in a specific investment. So when we speak of ROI, we are referring to your return on your investment. So, you know, whichever amount you have invested, the amount that you make based off of your investment. The next one is share dilution, which simply means when additional shares are issued in an investment, so there's an increase in equity, which then leads to the value of your share being decreased, so decreased ownership. That's what share dilution refers to. Then dividends, these are regular ROI, regular returns on investments. These could be monthly, quarterly, annually, or, you know, or even at a different interval. Capital appreciation simply means the increase in investment value. So when you invest today, you know, you are doing this with the vision of it increasing in value over time. And when it has done so, that's what we refer to as capital appreciation. Then special purpose vehicle, an SPV. This is simply a limited company that is set up for a specific purpose. So we will go a little bit deeper into that into the next slides, where we explain how you then become a shareholder essentially in a company rather than directly in an asset. So gross versus net return. Gross return does include costs. These can range from legal fees, insurance costs, and other costs, whereas net is the final return value of your investments after all costs have been taken. Then retail versus high net worth investor. So a retail investor can also be referred to as an everyday investor. Typically, retail investors invest smaller amounts as opposed to high net worth investors. And you know, it's ordinary investors who are new to investing, for instance, or who tend to invest smaller amounts. High net worth investors, on the other hand, they are established investors. They are experienced. They've made investments before, and these tend to be larger amounts typically. So in terms of tax, so we are going to be referring to dividends allowance and capital gains allowance, which is in the terms itself. It's so a dividend allowance tax simply allows you to earn dividends. In the UK, this is the amount of £2,000 a year without having to pay tax on top of that. And your capital gains allowance, as we mentioned earlier, when your investment increases in value over time and you make a profit off of that, there is a capital gains tax to be paid on that. In the UK, there is an allowance up to 12,570, I believe, for the year 2020 to 2021, which is the maximum that you can earn in a year without having to pay capital gains allowance tax on top of it. Then the secondary market, this is simply a place where shares can be bought and sold. So say, for instance, you've invested today and you've held on to your investments for 2 years, but actually you now need the funds to do something else with it. What you can do is sell your shares on the secondary market to other investors. This, of course, does depend on demand being there by other investors. But simply, it's a marketplace where shares can be bought and sold. Then compounding. So compounding refers to reinvesting the earnings that you've made off of your investment and generating a return from that, which is a great way to you know, continue to grow your wealth. And that's why we believe that the you know, investment graph, if you will, is not linear. It's not straight. Rather it's you know, it goes up in a curve, where if you reinvest your earnings, the compounded earnings that you've made, they continue to generate returns for you. And lastly, maturity date. This simply refers to the date that the final payment is due to you, and also it's known as the exit date of your investment. So as you can see, there's quite a lot on here, and I appreciate it might be a bit much to take in at this point, but we will distribute this at the end of the webinar. And if you have any questions in the meantime, please feel free to add them into the chat and we'll get back to you at the end. So that's it from me, Marwa.
Thanks, Medina. Just move on. So, Okay, so who are we? I guess the important question. So UDIS is UK's first Islamic fintech to be directly authorized and regulated by the FCA. We simplify earning and getting on the property market from as little as £100. We do have investors from all over the world and growing. So we have approximately about 8,000 users from all over the world and growing. Mainly our growth has been organic, which we take a lot of pride in, as it's all word of mouth. We appreciate that investments are is someone's savings, earnings, etc. And so having that level of comfort with us is really important. And so word of mouth has been doing great. So obviously we are also dual regulated, which means we are Sharia based. We do have a Sharia certification as well, which makes our platform the first fintech company, Islamic fintech company in the UK that was dual regulated. We have a simple award-winning online platform, which we will walk you through a little bit later. And assured, so with 100% equity asset backed, Sharia certified structure. So as mentioned, 100% halal. We don't take any, there's no loans or mortgages, and there's no leverage involved, which makes it 100% halal. Again, we'll go through what else makes it halal. Okay, so our journey. So we started in 2016. This is our, this is when we started. We did all of our regulatory submission, which took about 18 months roughly to get our FCA regulation plus our Sharia certification in 2017. We did also win a Global Islamic Economy Award in Dubai, which was presented by the Sheikh to us. In 2018, we embarked on the journey of doing a pre-Series A funding to develop all of our technology. So our technology was initially outsourced, and then in 2018 we decided to bring it in-house. So all of our technology is owned by us, and we scaled quite quickly. And our technology is very complex. So from start to end, it is backed by technology. From our investment process, from our onboarding to our investment process, to our secondary market, to your portfolio, to management, everything is automated. And then in 2019, we actually did a CDIS campaign, and we want to scale up further on operations, scale up on technology, and we also relaunched the secondary market. So again, that will be discussed a little bit later. In 2020, we did a website overhaul, and we actually last year we developed our open banking APIs, which now enables us to plug into different API systems from banks to other investment providers, as well as other marketplaces, which will help us scale even further. And right now in 2021, we've been scaling on our deal flow. So we currently have £10 million plus in assets under management, and we've got, I know it says 7,000 plus users, that's a little bit under, but we've actually got 8,000 plus users now on the platform. We have a fantastic reinvestment rate of 72%, and our average returns that have been achieved are between 4.3% and 8% net return. So just going back to the point that Medina was saying about gross and net, everything we quote on our website is net. So what you see is essentially what you get in terms of your net returns. So your rental return and your capital appreciation or profit share is all in net values. So essentially we do have fees, but everything you see in your portfolio, once it's in there, nothing would be asked of you in terms of fees any further than what you've already received. Number of active assets, we've got 19 at the moment. So just going on to the next one. I'll just hand over to you, Medina.
Sure. So why should you invest? As mentioned earlier, there are a number of benefits to investing, but these are the three main ones that we sort of think stand out. Firstly, it's it generates passive income, especially investing in real estate, in the real estate market. It allows you to grow your wealth without you having to work for it. Your funds sort of do the work for you in terms of generating that passive income. It allows to outperform inflation, which obviously does affect the purchasing power of your funds. And the second reason why we believe it's important to invest is to, as mentioned, growing your wealth. So we actually provide two different investment products, including retail products and top yielder products, which we will go into later a little bit in detail. And finally, as mentioned as well, compounding your returns. Again, it's the best way to sort of grow your wealth in terms of reinvesting the earnings that you've made of your initial investments. You can do this as many times as you like in the properties, and you can even set up a direct debit from your registered bank account to add funds to your online wallet.
Thanks, Medina. So just to add to that, we are currently developing an auto investment functionality, which will enable, obviously, will complement direct debit payments nicely. So once you have your direct debit set up, you can just select the type of investment you'd like your money to go into, and then it would automatically invest for you. But that's still hopefully end of Q2. That's the plan. But we'll let you know because we share our newsletters on a monthly basis.
All right, so just to touch on the types of investors that we have. So we have everyday investors, also known as retail investors, as explained earlier. So everyday investors can invest from as little as £100 into assets that generate income based on rental income, as well as capital appreciation after the investment term. So the yields are typically between 4 to 6% and paid monthly straight into your online wallet. And investors can start earning their dividends from the first of the month, after you invest. Then there are sophisticated investors. So they typically invest from £25,000. They have access to some pre-funding opportunities and development opportunities, which again we will explain in a little while. And so the yield per annum is 4 to 6% on liquid pre-funding investment, and the return on the development projects is between 10 to 18%. So this allows you to grow your wealth with more flexible investments, as opposed to only everyday or retail investments. Then finally, there's so HNW investing, so high net worth. So the investment amount, the minimum investment amount for those is £50,000. This allows you to access all pre-funding and development opportunities, and the yields for those are again between 4 to 6% per annum, based on liquid pre-funding investments, and returns of 10 to 18% on development projects. So HNWs also have first priority to our latest bespoke investments.
Thanks, Medina. So just to go over the pre-funding of investments. So this is something I touched upon, that all of our investments are based on cash buying only. And this is facilitated by our high net worth investors. So they essentially pre-fund. So we have a pool of cash from high net worth investors, and they pre-fund the investment. So we use the funds to purchase the asset and basically make it available to retail investors. I think the next slide will go into a bit more about how we actually how this entire process works from end to end. I know we've used bits and bobs over here on development opportunities, pre-funding and retail, but yeah, we'll explain it into the next slide. Okay, so yeah, so this is basically the most interesting slide, how it works. So the everyday opportunities. So point one, which I've just discussed with you, which is identifying the opportunity. And this is, we have a team of investment analysts who look at all of the different opportunities that come through. We produce it into an IC pack. So the investment committee then takes a look at all of the investment opportunities that have come through. These they're vetted to a level that these must be yielding a minimum of between 4.5 and 5%, but we're actually sticking to 5% net returns, which means that we have to constantly look at properties under market value to identify them. And so we're able to obviously maximize rental returns for our investors. But at this point, you have no idea, as a retail investor, you have no idea what's going on in the background. And then we basically create an SPV. So Medina touched upon what an SPV is. So each asset is placed into an SPV, special purpose vehicle model, which means it sits in its own limited structure, company limited structure. And what that does is it actually it makes it separate from the Yildiz business itself. So if, say for instance, if Yildiz was to go bust, the SPV stays intact, and the shareholders, which is the investors, they then become they are the legal owners of that limited company, and they can make the decision on whether they would like to sell, keep, rent, etc. So the way the Yildiz model has been built is actually completely segregates any of the investors' investments from the actual business. So Yildiz is not the owner of these properties. And then the third point is we acquire assets. So we acquire this, we secure it through the H&W investors. It's at this point that we vetted it. We think it's a great opportunity. The numbers have been run. We've created the financial summary. We've used RICS reports. We've done the information memorandum and the articles of association, so the legal documents that are associated with an opportunity, and we present it to our high net worth investors. So these are also called the top yielders. So they get an email from us, they get all of the communication, and they proceed to make an investment into this property, and they're happy to do so. So what is it in for the high net worths? That's a lot of the question. A lot of the times we get asked that question. A high net worth, a foreign high net worth of a pre-funding deal is like a liquid saving account for someone who has 25K above, who would look to, instead of keeping it in the bank and doing nothing at all, is actually yielding a rental, it's earning a rent. So once this property is acquired and we've secured a tenant, it's now already, it's rented out and it's yielding for our investors. At this, so point three, once we've acquired it for our high net worths, we then at point four have a rental agreement in place. So a lot of the times the properties that we purchase are already rented out. There's a rental agreement in place with tier one or third parties. So more around so a lot of so it's either with the council or for the purpose of, or a charitable cause. So we try and find a tenant that is longer term, and that's more, so we try and mitigate the void periods that do occur with tenancy agreements. So at point five, this is when we actually release it and offer it to the crowd. So this becomes available to all of our retail investors on the asset. So at point five, it's already been acquired, it's been through all of the stages, and it's already got a rental agreement in place. And so it takes me back to the point where Medina stated that you will earn your rental income 1 month after you have made your investment, because it's already earning, it's already generating an income. So you're not waiting. So a normal crowdfunding platform would basically, the conventional style is to take the money, acquire the asset, and at that point it may or may not be available anymore. Then you have to secure tenants and then start the whole process, which would take about 6 months before you earning a rental income from a traditional or conventional crowdfunding platform. The crowd investment offering that we give is very different. And then at point 6, this is when you receive your rental return, which is 1 month from in arrear from when you made an investment. So for instance, if you were to make an investment today and we're in the month of June, you would earn your first rental income on the 1st of August. That's because we register and we have to legally transfer the shares to all of the investors' name on the 1st of the next month after you've made an investment. So that would happen on the 1st of July. So from the 1st of July, you earn the rental income. And then it's paid out to you on the 1st of August. Okay, so more than just a website. So I touched upon our technology. So everything we do on the website, it looks very simple on the outset, but everything that has been done is automated. So from our onboarding process to our investment process to the secondary market, and also we have now the opportunity for high net worths and pre-funders to invest through the website. That has always also been enabled. Your reinvestment, you can make more investments as you go along, as well as access to our secondary market to buy real estate shares from in-flight opportunities. What is secondary market? So say, for instance, every single one of our investment opportunities comes with an investment term of 5 years, 3 to 5 years. If you wish to dilute before the end of the investment term, you are able to do so through the platform. And you have the option to be able to dilute your shares. You will be earning rental income up until the point that you have sold your shares. You will miss out on the profit share, which is basically your return on selling of the asset at the end of the investment term. But other than that, if you wish to free up your investment, you can do so, and this is obviously subject to someone, so an investor being interested to buy your shares. So that is subject to the appetite of another investor purchasing your current shares. You have a secure online account, so you can track everything through the website. You have a My Portfolio, which gives you a full breakdown of your earnings, your dividends, your profit shares, and also gives you a breakdown per asset as well, what you have invested into. You can also access the website from anywhere in the world. And as I said that, we have now got open banking APIs developed, which allows us to now plug into various different third-party services. And the next slide is just a very quick demo of how to make an investment through the website. And then I would like to walk you through the investment calculator and just taking a single example to walk you through the process.
All right.
So just, are you
on the website?
Yeah, go ahead, Medina.
So on the website, you would go and you would log into your online account. On the main homepage, you'll be able to see any featured properties or any newly added properties as at the bottom. But to access all properties, you just simply go to the top and click on properties and see all properties. There you can see ones that have been sold out in the past, so you can have a look at our historic properties as well as any that are open. And you can see a quick overview, and to see further details, you'd click into the property and find all the information relating to that investment. So to invest, we have 2 important documents, which is the Articles of Association and the Information Memorandum, which you are required to read. So you have to download them and read, which outlines basically the entire investment in detail. Then you can, when you click on invest, you can adjust for your amount to match the number of shares that you wish to invest, and see if there's any stamp duty due. So once that's invested, this will then appear in your My Portfolio section. So in My Portfolio, you can have an overview of all the investments that you've made in the different assets that we have available, and see your current earnings, your total earnings, and your analytics, the analytics of your investment. You can also go into analytics and set your investment goal in terms of the amount that you wish to invest by a certain amount of time and the returns you wish to make. And in your My Investment section, you have a historic view of your investments, where you can also access your official share certificate relating to your investments. Then in My Profile, you have your online wallet where you can add funds and withdraw funds, as well as update your details and view the transaction history, which includes investments you've made, returns that have been paid out to you, etc. And that's mainly it.
Fantastic. Thank you, Medina. Yeah, so I think this is a really good summary of what the capabilities of the platform are. I think one thing we missed talking about is the creation of the e-wallet. So essentially what UDAS has done is thinking about the opportunities that, for instance, having a Rightmove website plus a bank account, and we've merged the two together. So essentially what you're creating is an e-wallet online. So your profile is almost like a bank account with the same KYC and AML checks that you would have with opening a bank account. We are FCA regulated, so by law we have to onboard all of our investors with their proof of ID, proof of address, and ensure that there's AML checks have been made, which is the anti-money laundering checks have been made and completed. And essentially you can then add funds directly. Once you are onboarded fully, you can add funds into your e-wallet and then look at the different opportunities that are available on the platform and make an investment. I think on this note, I will share my I will share the website. Yep, so just bear with me. Okay, so we are right here on, so this is our latest opportunity, which actually went live last week on Monday. And can you hear me?
Sorry, your screen is lagging a little bit. Let's just wait for 1 minute.
Okay.
Yeah, it's on the website now.
Okay, all right. Yeah, thanks, Medina. So I think Medina's obviously walked you through the two important documents that we have, the Articles of Association and Information Memorandum. These are legal documents that have to be downloaded and read in your own time. However, I just wanted to walk you through the terminology on here, which is actually quite daunting to start with. When you look at all the different wordings and the numbers, it can get a little bit daunting. It took me quite a while to get my head around it because I'm not a numbers person. I don't do maths very well. I'm tech instead. Okay, so we have an investment term. The investment term, as you mentioned, so a property comes with a total investment term between 3 and 5 years, which means that this is how long your investment will last in this property. The investment term remaining is almost like a ticker. So this property has 2 months have already elapsed from the 5 years. So 58 months are remaining, which means that if you were to come into this investment at this stage, you will start earning pro rata of your rent shown over here for the investment term remaining. So if you were to have invested from the day it started, you would have earned 37.73% overall over the 5 years. At the moment, it's at 36.87%, very, very minute difference, but this is what basically the main difference is between the two. Projected rent. So this is your annual earnings. So this is 5.14% net rent that you would receive. And this rent is annually. So as you can see, the first line over here, so based on a £10,500 investment, for instance, your projected rent is 5.14%, which equates to £539.70 annually. And per month is £44.97. So we pay this dividend out on a monthly basis, so you don't have to wait a whole year before you receive your rent. And then going back up here, projected return. So this is basically your value. So this is your projected rent plus return over the 5 years. So this is 5.14% times 5, and anything on top is actually your capital appreciation, which makes up the 37.73% net return that you would get in at the end of the investment term. Currently, we have 90 investments in this opportunity alone. So as you can see, it's 33.69% invested into. A lot of the times we do get questions like, will I get my rent if this is not 100%? Yes, you absolutely will. So as mentioned, the asset is already invested, is already rented out, and it's income generating. So it's not awaiting funds from anyone to complete this deal to then get it rented out. So you will absolutely still get your rental income. And finally, so talking about the net projected return for the investment term remaining, your total amount that you will receive if you were to invest today would be 14,371.70. What that constitutes of is your initial investment amount, which was £10,500, plus £539.70 times 5. So into the 5 years that are left, and then any capital appreciation on top. So the 539.70 times 5 is already included in this, and you will earn your investment, or it should be 10,500. I think that's correct. Yeah, projected capital and rental return at the end of investment would be £14,461.65. I think this is everything on this slide. Just go back to slide over here. Medina, that was you, right?
Yep. I am just waiting for your screen.
Can you see it?
Yep. So let's go. Oh yes. So yeah, I can see it now. Sorry, it took a while. So our pledge review this when you invest. So we are an ethically minded, investment firm. We focus on, as mentioned, real estate, and most of the times we try and source tenants through, for instance, the council or charities. We're very heavy on ESG, which is environmental, social, governance investing. So our assets are all free from debt or leverage. As Marwa explained the pre-funding process, all of our assets are acquired through pre-funding, which is simply a pool of high net worth individuals. So we do not deal with any interest or any debt. So rental income is paid as dividends to your e-wallet on the 1st of each month. There are no hidden fees or charges. So as mentioned, the returns that you see based on the calculator that Marwa has just shown you, these are net returns. Our costs have already been taken into account, and there's a clear breakdown of all of these in those two documents. The financial summary that you see on the calculator, and the articles of association and the information memorandum. So transparency is also very key for us. Then we've got a diverse selection of properties added regularly to the website, including pre-funding deals, development projects, and retail opportunities. We have a very friendly and attentive team on the end of line to answer any queries and assist you every step of the way, and are available always for you to ask your questions. And finally, clear and open and honest communication is what makes us, and that's who we are. That's what we do. So any questions that are asked, we always try and deliver to most transparent possible way.
Thanks, Medina. I'd also like to highlight three. So the main points that makes us an Islamic fintech is obviously being Sharia based means that there is no leverage, but also the fact that we are transparent. We give full ownership, voting rights. So once you become a shareholder, it becomes you have voting rights in your investment. So if we were to sell earlier than expected, we'd only ever do what our investors ask us to do. We will give you advice. However, we will never make it our decision unless it's something that you have decided. And also the fact that making an investment in properties makes it a sustainable and less risky investment to make. So obviously abiding by the principle of gharar, which means extreme volatility. So with making investment in properties, you are it's one of the safest options of investment to make, as there is not a lot of volatility in the property market. But if that was to happen, for instance, if a crash happens, then obviously this is something that we anticipate, and which is why so much work goes into each of the assets to ensure that we are covering all our bases and we're mitigating against risk. Having said that, COVID did have quite it has been very difficult for a lot of businesses, and likewise with us as well. Some of our tenancies, so some of our rental properties did have voids. Moving forward, what it has made us realize is that going forward, we're going to look at fully repair included leases, and we will not so much look at the assured short-term tenancy leases, because what that will enable us to do is to obviously further mitigate against risk of having a void period. And obviously with the fact, with all of the rules around evictions, it has been difficult with some of the properties, but this is why we keep it very transparent, and this has been communicated throughout to all of our investors. And at the same time, I think our investors have been extremely understanding and of the situation. It was an unprecedented period for most businesses. So of course, coming out stronger the other side is what we are doing at the moment. And I'll just, I think most important now on the next slide is actually a very good demonstration of a really good exit report for one of our investments, and not so good exit report, but then how we flip that to actually ensure that it continues to yield for our investors. So on the left side, you can see Gravesend. So this property was the performance that we had projected was at the end of the investment term to earn a 39.96%, but actually we achieved overachieved for all of our investors. We achieved 55.12% after 3 years. So that was a fantastic return for all of our investors, as you can see. So the capital, what the projected was versus what the actual was on the right side over here. So where the dips are is basically when, say for instance, there was some fixes required in the property, and so we had to so 1 or 2 months the rental earnings dipped down, but obviously picked back up again. So again, this takes me back to the point of looking at more of the types of leases that are fully repair inclusive, which would then help us, which would avoid having dips as such in the rental returns. On the right side, this is a property that was actually due to exit last year, but obviously we were in the middle of a pandemic, so the RICS report came in a lot lower than expected, which is to be expected. I think again, it wasn't something that we'd been through before. But the way our platform is, it enabled us to basically send out a vote to all of our investors, and whoever wanted to dilute their shares at a reduced share price, they were allowed to do so. But whoever wanted to continue renting this property also was allowed to do so. So we renewed the lease for a further year, and now it's coming up to that renewal, the end of the renewal. So the property is currently being prepped for sale, and it will be on the market very soon. But again, it was an opportunity for us. It goes to show the way our platform has been designed. It's enabled us to facilitate both scenarios, the good and the bad, and not so bad, but we've continued to earn rent for our investors. So again, keeping it transparent is at the forefront of what we do, as there's no point basically not being transparent, and as an ethical company, that's what we believe in. In terms of our fees, we haven't touched upon that, but again, the fees, we have 3 types of fees. So the first one is when you make an investment. The first type of fee used to be per investment, 2.5%, but we've now rolled it into the acquisition cost of the actual asset, which means you don't see it. We roll it up into the actual property. So if I just go back, sorry. I go back to the website, and we have a financial model that basically sits with every single investment. So over here, you'll see, so everything is transparent again, so you can see, so within our legal incorporation, other fees, a cost of 2.5% sits within here somewhere. And that's where basically the acquisition cost is the 2.5%, but you don't see it as an investor in an individual investment. The second fees is our 10% yielders management fee on the rental income. So when a rental income comes in, we take 10% of that, and that covers our costs in terms of share transfers and all of the work and the admin work that is required. And then the final one is the 15% profit share. Now, the 15% profit share is basically where yielders would like to make money. So our profit is tied to your profit. So if we make a profit for you, that's the only time we profit as well. So if we were to purchase a property for £200,000 and we end up selling it for £300,000, we'll take 15% of the £100,000. But that's why it's in our benefit to make you profit so we can profit as well. I think, okay, I'll just go back to the slide. And okay, and then finally, pre-funding for HNWs. We've pretty much covered all of that. I'm wary of time. It's now 7 o'clock, and we need to just get on the Q&As. Sorry, it's taken a lot longer than I thought. But yeah, we can definitely touch upon pre-funding. Please get in touch if you have any questions on that. But I'd like to start with the Q&As. Medina, do you want to start?
Yes, sure. So I am just going to have a look at the chat. Anybody who has a question, please submit it through the chat and we will go through it.
Got quite a lot. Okay, so first one is from B. So Simon Haq, you said, I think your FCA accreditation also instills confidence and was a huge factor for me joining in Yielders. That's fantastic. Simon, really pleased to hear that. B, so is money invested on Zakat applicable rather than cash in bank account? So because the money is invested, you don't need to pay zakat on it. However, you do need to pay zakat on the dividends that have been earned if they have been in your bank, in your Yielders account for the last 12 months. So that's the amount that would be zakatable. Anything that is invested, you do not need to pay zakat on. We do have on our help center, we've got an article that clearly states what is zakatable and what's not. And also Islamic Finance Guru have very kindly created a fantastic zakat calculator that is actually Yielders is actually part of. So if you have an investment with Yielders, it calculates it for you, what your zakat should be. Okay, save as well as invest is a concern for me too. Also entering a male dominant market can be intimidating. Absolutely, Mariam, I totally agree with that. It can be. And sometimes I found myself feeling a little bit wary of the types of questions that I would ask with more of a male dominated kind of audience, just because I'm not sure in what way I'll be judged, or people may say, oh, how come she doesn't know that? So I do understand where you're coming from, for sure. Does the allowance apply to non-UK residents? Am I missing that? I don't know. Sorry, not sure what. So tax allowance. So Medina, do you want to answer that?
Yes. So the amounts that I mentioned, these are specifically applicable to the UK. We do, recommend that you find out what these are for the country that you are investing from, as this will likely be different.
Do yielders have an app or plan to develop one? Absolutely, we do. So this is so our tech plan roadmap this year does include an app. Whether there's no promises whether it will be ready or not. However, it's definitely part of our Q3, Q4 plan. Again, it will be definitely communicated to all of our investors. What are the fees? I've already gone through that. So it's 2.5% and then 10% and then 15%, but each one at different stages. 2.5% is rolled up into the acquisition cost of the asset. 2.5% is on the rental income, and 15% profit share is on the actual capital appreciation on exit of the property. Next one, can you automatically reinvest the monthly dividend received from the property rather than holding as cash in the wallet? Bushra, we are currently developing that, again, part of technology, as an auto investment functionality, which we're hoping to have ready by end of Q2. And that will complement the whole direct debit process really nicely as well. So you can set up your direct debit, which we currently have working already, plus an auto investment functionality. If you aren't the property owners, then who is Medina? You want to go for that?
Yeah, sure. So I've just read the comments from Alina, and she's correct in that it's the SPV, which is an entity in its own legal right. So we, as yielders, we aren't directly the owners. It's you as the shareholders who collectively own the SPV, and we oversee and manage the limited company set up specifically for the investment assets.
Yep. Thank you, Medina. Okay. Called a special. Oh, thank you so much, Alina. That's wonderful. I'm just reading through the messages. And then, okay, I'm sure. So do you have statistics on the liquidity of the shares? Actually, very good question, Alina. Thanks for that. So liquidity of the shares, so in terms of statistics, we don't actually have the percentage of that. But what I can share with you is actually quite liquid. So whatever we do have someone wanting to liquidate their shares, they pretty much go within the hour. However, obviously that's not always applicable, depending on the amount that you're liquidating and also the type of property, and whether it obviously fulfills the appetite of the investor. But what would happen is, if you were to liquidate before the end of the term, say for instance in the month of June, then you will receive back your initial capital on the 1st of July, or the 1st of the next month. With pre-funding, how does it work with stamp duty and capital gains tax when buying and selling properties, given it is likely to happen repeated? Really good question, Alicia. So with the pre-funding, so the stamp duty, actually that's another point that I didn't cover, which is, so the stamp duty, there's 0.5% stamp duty that's applicable on an investment of £1,000 or more, and this is obviously not for us. This is for HMRC, which has to be paid each month. With the pre-funding, that's all rolled in, so we don't actually, so with the stamp duty, we take it within our cost, and that's not something we charge the pre-funders for stamp duty. In terms of the capital gains tax, so that is essentially it's not considered a capital gains tax, because you are earning a dividend. dividend on it. So that's rental income only. So it will be your dividend allowance. The capital gains is applicable at the end of the investment term if the asset sells at a profit share. That's where it would be applicable. What's the process doing pre-funding? Alicia, would you like to get in contact with us? So we do have an investor relations team that's dedicated to pre-funding and high net worth investments. Medina, if you just leave the email, please, and all of the details in the chat, and we can reach out to you, Alicia, to explain the pre-funding model. Are the properties residential or commercial? Actually, so we have got mixed use. So some are residential, some commercial, and some actually mixed use. So the example that I showed you at Gravesend, that was actually a mixed use property. So it had residential and commercial. So we're open to both. It doesn't really matter as long as it hits our targets and also it achieves the returns that we're looking for. Aisha, is it better to invest through a limited company or personally I own my own business and take dividends from it? So I think from a financial perspective, we're not in a place to give financial advice. So perhaps it's better if this is discussed with your own, obviously, accountant or financial advisor. However, obviously with a limited company, you still the dividend tax allowance still applies. So perhaps it would be, we do have a lot of investors who choose to invest through a limited company. So it really goes down to your own research and where you think that would be beneficial for you in terms of tax efficiencies. Do you plan to set up a REIT in the future? At the moment, no. However, we did look at ISA based products. So definitely something that we are looking to develop and see how we can incorporate it in our current model. Again, it will be communicated to all our investors. We are, as mentioned, this year is all about scaling the number of investment opportunities that we provide to you as COVID did pose quite a difficult time with obviously investments coming to a halt last year, etc. However, it gave us an opportunity to rework our technology and scale that and obviously improve that as well. Medina, do you want to take the next few?
Sure. So there's a question from Bushra. Will there be a minimum amount to invest if there's an auto invest function to reinvest dividends? I.e. for direct debit, it is a minimum of £50. I think more of this question actually relates to you with reinvestments. Yep.
So obviously, because investments are a minimum of £100, £100, that means yes. So it would have to wait for 2 rounds of direct debits to make it at least £100, or you could already have funds in your e-wallet from a dividend payment, etc. So as soon as it gets to £100, it would then enable your auto investment functionality based on your criteria that you have chosen.
Yep. So a question from Elena: Are the properties managed by yielders? So we do have designated managing partners for all of our assets, that we deal with, and of course, yielders works closely with them to oversee the management of those. So the next question is: what is the extra benefit for £25,000 investment? So as mentioned, specifically, for instance, through the pre-funding process, it's like an illiquid savings account, which allows you to earn dividends monthly, and then you can resell your shares onto retail investors. Essentially, it allows you to make a short-term return. You can invest for instance, 6 months, earn your rental returns, and then liquidate your funds to invest in another asset. So we do have a number of investors doing this actually, who pre-fund one asset, then they earn a return, and then they make their investments liquid and then go on to invest into another and into another, and it's a cycle like that whereby they continue generating returns. So another question: does HMRC classify?
Just Medina, just on that point, Aisha, I think it depends whether it's a pre-funding investment or a retail investment. Obviously, the retail means that it continues to earn rent, and obviously, the higher your investment amount is, the higher your rental return will be, and that's obviously based over 3 to 5 years. As a pre-funder, again, you are earning rental income on a short-term basis on that £25,000, which is otherwise doing nothing in your bank account, and then you are receiving back the capital as well as soon as the retail investors start purchasing those shares on the investment on the platform. You then start getting return. You keep getting back your capital return as well. So either way, you are benefiting either as a retail investor or a pre-funder. But also, I think looking beyond that is actually, assisting us as an ethical business to do something that is that we're so passionate about, and to make Islamic fintech, flourish further.
All right. So then the final question from Asma: does HMRC classify it as property income or as dividend income? So when you invest with us, it's because this happens through our platform. We're an investment firm. Any returns that you make, these are classified as dividend income rather than direct property income.
Okay. I think that's all of the questions. If we've missed anything, please do get in touch. But I hope we have we've answered all of your questions, and we're really pleased that you could make it. Oh, thank you so much, Alina. Great, alhamdulillah. Obviously, we will be circulating the webinar as well as the slides, hopefully by tomorrow. But until then, thank you so much, everyone, for joining us. And hopefully this is one of many to come. Thank you, Medina, as well, for your input. And it's been great hosting this.
Yes, thank you, everybody. We'll be in touch shortly with the resources. So have a good day, everybody, and thanks for attending.
Assalamu alaikum.